Good day, everybody. Sil here, joining you now for a very special market update on this October 17th, 2012. I want to share just a few things and recap some things that Steve had mentioned in his last recap. I'm going to show you this is the S&P as a market. I'm going to go back here just a little bit. You're going to see the pivot highs that were formed here back in April and in May. And we went horizontally as those pivot areas, and since that time we saw a little resistance late August, and then again as the markets corrected into that area, those levels held quite nicely. So a couple things to point out, in fact two or three things to point out. One is that prior resistance, which now turns support, did hold, and we saw a significant rebound following this pullback and correction area. It occurred with a bull sash formation, very strong formation here we see on that particular day a couple days back on Monday. And the Bollinger Band was being tagged at the same time the stochastics was being oversold. And we also see a rising 50 moving average. So there was a lot of support here in this level, in this particular region, and certainly a very strong reversal candle signal that occurred. Now, note where it's rising to now. There's going to be certainly some resistance that is starting to move into. There's still some room. That horizontal red line I've got is drawn kind of loosely. It's based on pretty much the closing price and the opening price back in early to mid-September. The shooting star nearly coincides with those levels, but there will be essentially a band or an area, a region of resistance up until probably as high as about 1470, and some change probably up in that area will be the resistance. The Bollinger Band is in close proximity as well, but certainly the overall trend still seems to be up. But at least in the more short-term to intermediate time frames, we'll say September into October, it's been more sideways. You can see the series of lows and the series of highs. So there may be a box formation. So for now, it appears that the next resistance will be up into the 1470 area. We'll have to see if the markets have enough bullish nature and bullish sentiment to drive through that, or will it act as resistance. So watch for any kind of candlestick formations in a reversal bearish look to see what happens up there. Support, of course, is where we are now at 1425 on the S&P at the moment. So with that, I'm going to take you over to the euro. And the euro did something very, very similar here as well. You can see very similarly, prior pivot areas were forms of resistance, which now turned into support. There was a breakout above this black line here you see is the 200 moving average, and you can't quite see it, but it's actually being hidden by the dashed blue line, which is the pivot area in that 128 area. That's, in fact, that's it right there. The 128.23 is where the 200 moving average currently resides. So we are seeing a few things here. Once again, a pivot area that's acting as support. We saw multiple reversal candles, bullish engulfing, a piercing, and then another bullish engulfing just a few days ago with a mild bounce. Probably a minimal resistance into this area right up here, right across here. A little minor resistance that's likely entering right now, and then ultimately the bigger resistance will be in the evening star formation that's up here. So the high of that evening star formation would be the likely true target, with maybe a little bit of a hiccup in this where it currently is right now at the 130.52 area. Right now it's running into a little bit of a declining Bollinger Band. You can see those are narrowing a little bit here. So it's looking like at some point here in the near future there will be a fairly volatile move, and maybe this is the beginning of it already, where the Bollinger Band on the upper side here, this upper band, may start opening up. We of course do have a rising 50, so the trends are still there. The longer term 200 of course is still flat. So again, somewhat of a box formation here, similar to the S&P formation, the S&P box formation as well, very similar to that. We're seeing a rising stochastic. The lows are getting a little higher, so there's certainly some kind of a bullish or positive divergence that was developing as this bullish engulfing was forming here in the early parts of October. Okay, so from here, let's go on to gold, because gold, in my opinion, is showing some interesting activity as well. So it had the muffin top formation coming around the 1800 area, up and over, and found support near at the 1740 area. So there was a prior resistance back over here in the early parts of September. There was the large breakout, if you recall. It pulled back, found support, did test, and bounced again, came into just about into the 1800 level and then retraced all the way back down to 1740, where the again change of polarity occurred, and we're seeing this muffin top formation. Now we're seeing a little bit of a bounce, and the bands are starting to open again a little bit based on some volatility. We're also seeing a rising 50 here, and we're also seeing the stochastic well below 20 in an oversold position. So one to watch here to see if gold can continue its bounce back into the highs of 1780 as well as 1800, and form its own box formation as well. So resistance right now would likely be first and foremost where the bear sash is, just below 1780, and then ultimately into the 1800. And of course the support area right here at 1740. For those of you that are long, that would be your stop. Okay, very good. Thank you for this update. I look forward to speaking to you again soon. Enjoy your trading week.